Welcome to Wealth Management Mixtape, a go-anywhere show about life, finance, and investing. Join Jake Heisler and Tim Miller as they talk about what they're reading, writing, and experiencing. Jake Heisler and Tim Miller work for Quaker Wealth Management. All opinions expressed by Jake and Tim or any podcast guests are solely their own opinions and do not reflect the opinion of Quaker Wealth Management. This podcast is for informational purposes only and should not be relied upon for investment or financial planning decisions. Clients of Quaker Wealth Management may maintain positions in the securities discussed in this podcast.
Well, welcome. We were confident enough, I guess, to do another episode. We had quite a few views, and I think most of them were me and you, but it's to be expected. Now, my dad watched. He's the history teacher, remember? And he said it was the first podcast he ever watched from start to finish. I'm willing to bet that's the first podcast he's ever watched. And he was most interested in, believe it or not, how Abby was doing in swim class.
Out of all the history you discussed, Abby was most important.
I guess I was right. He didn't correct me or anything, but I think he was most interested in episode 2 of Abby's swimming conquests or lack thereof.
I guess Abby supersedes the Battle of the Bulge, right?
Yeah. And she, to bring my dad up to speed if he's watching, she had a little bit of a tough time again. I took her this past week, and she just she's fine up until she gets to like right inside the pool area. And it's like a small pool, and it's a bunch of kids splashing around, and she can't stand splashing. So even with goggles on, she'll turn away the entire time from the pool while like other people are swimming around her, and then come back when she has to jump in. So anyway,
it's quite the dilemma. Swim.
She cries. She's like bawling. She gets close, and then she latches onto you and doesn't want it, but you have to kind of
And she's 4 years old now, right? 4.
She'll be 4 this Sunday. Yeah.
Wow.
Yeah. Anyway, so we thought we'd start off today with kind of a look back on the month of March. We're going to call it Monthly Rewind. We're sticking with the theme here of Mixtape. So some stuff happened that was probably a little boring, like the Fed raised rates. Everyone was expecting that a quarter point, and then not much has materialized with Russia, Ukraine. It's still kind of going on, and one day there's bombing, the next day there's some peace talks, that sort of thing. So we'll see where that ends up. But one of the things that happened that we were most excited about in the office, so much so that one of our colleagues, Nick DeSantis, wrote an article about it, which was daylight savings time and a bill to, in essence, do away with it, right?
Yeah. I feel like everybody's a little off for like a day or two after the clocks spring forward, right? It's like everybody's a little groggy here at least here in the office, and I'm sure it applies to everybody.
Well, if you have kids, I mean, forget it. Like this is like the easiest bill to vote yes on, especially when you have young kids that are just not. And we have 1-year-old twins, so it's like it was welcome news.
It's cutting into your non-existent sleep schedule as is, right?
We're sleeping okay. I mean, all things considered.
Yeah.
My wife is sleeping worse than I am. Let's put it that way.
That's good. When we're talking about daylight savings, there's obviously a lot of debate around the topic, whether to keep it standard time or, what we're doing now, which is daylight savings, springing ahead and falling back 2 times a year. But it's interesting when Nick was writing that article and I'm reading it, and he's talking about, kind of the origin of daylight savings. And it goes all the way back to Ben Franklin. And I know a lot of folks mistakenly give Ben Franklin credit for the idea of daylight savings, which isn't entirely true. We'll have your dad fact check this as a history buff. But when I was reading about it, so Ben Franklin, another thing I didn't understand or didn't know was when he was a little bit older, he actually moved to Paris to create an alliance with the French, right? And during that time, he wrote a letter outlining that if the Parisians are able to wake up at dawn, right? So when the sun comes up, they would save a modern day equivalent of $200 million through what he termed the economy of using sunshine instead of candles. And the first thing I think of, what if you're a candle maker in the late 1700s? Like, how much do you hate this idea of cutting out an hour of use? I mean, like, what percentage of profits does that cut in for a candle maker? So, Ben Franklin didn't invent daylight savings, but gets a lot of credit for it. It was actually, if I'm reading this correct, an Englishman by the name of William Willett. He led the first campaign to implement daylight savings, but strangely enough, it was Germany that was the first country to implement it. So a lot of different moving pieces there, but in summary, Ben Franklin was not the originator of daylight savings.
Is that lazy if your parents name you William Willett? It's just not much thought goes into that, I guess.
Must have been like the fifth child or something like that, right?
Yeah. Hey, watch this. The stocks bounce back. Can you hear that?
No.
I had cheering on my end going on. Stocks recovered from their pre-Russia-Ukraine pullback, which is fun. We were talking all about in the last episode about kind of rational behavior around investing and that sort of thing. And everyone was scared, and when everyone's scared, usually it's a decent time to buy stocks historically. And if you would have bought, the phrase "buy the cannons," right? The invasion itself, you would have been pretty happy about that. Not happy about war, obviously, but if you would a stock picker or stock buyer in that time, that's usually a decent time historically to buy, and it was this past time as well.
That's not saying that it couldn't reverse course, right?
Right.
But
sure.
From the invasion until today, it seems like it's proven right again is by the invasion.
Right. And I think the full saying is buy the cannons, sell the trumpets. So I guess we're supposed to get out when there's a peace treaty or something like that. And then the other opposite of stocks, of course, bonds are, man, this is again, doing this 20 years now, this is the biggest rout in bonds I've ever seen. I think this is the worst month. March is the worst month. Now, I don't know about the last couple of days, but this month is the worst month in the last 46 years. Total return.
Wow. That's
just
incredible.
Unbelievable. Yeah. So you have conservative investors who, 70, 80, 90% of their portfolio is in bonds and wondering why their portfolio is down is more than some more aggressive investors. And it's because I think the perception of rates going up, interest rates go up, bond prices go down. That's the typical association. And everyone thinks rates are going up a lot. And the Fed increased rates to kind of reinforce that idea. And man, it was just it's been a rough month for stocks.
Yeah. Yeah. A lot of conservative investors who have that bond allocation, they're always thinking, well, in times of volatility in the stock market, at least we have the safer side of our portfolio, which is the bond side, right? Relying on that income stream from dividend, paying stocks or the bond side. And I think just helping them to understand why the bonds are as down as much as they are this year. And like you said, it's the largest drawdown in bonds in 46 years. It's pretty incredible stuff when you really think about it.
Yeah. And the other big topic of March was the 2 and 10-year Treasury yields inverted for, I think it was literally a minute. I didn't look at the market today, but or the Treasury curve today, but yield curve today. But and so historically, that's been a signal of potential a looming recession, usually in the next year or two. And this brings out like all of the doomsdayers on Twitter. If you're on Twitter, I call them Twitter muscles. It's like people can't wait to tell you why things are going to be bad in the future, and it's just it's like something like this happens, and then it's just like everybody. It's like mice scurrying out into the light, and then getting on their keyboards or their phones and typing, the end of the world's upon us because the yield curve inverted for a minute.
The keyboard warriors, right? Another term for them. Seems like they come out in bunches in these times. It's funny you say that. I was watching what we call the talking heads on TV today. And one of the moderators said, or posed the question, is our fate doomed for recession? Is it cemented for next year? I'm thinking, how is that cemented in any way? I mean, I know that it is an indicator of recessions in some cases, but it's just funny that, it inverts for a minute and we're already talking about our fate is cemented 12 months from now.
Yeah. And I know Ed Yardeni, who's just super smart and analyst and has his own firm, Yardeni Research. He looks more at the 10-year versus the 3-month rate as opposed to the 2-year rate, and we're nowhere close to inverting there. And the reality is that the last 7 times this happened, that there was an inversion of the 2 and 10-year yields. 1 year later, the average return of the S&P 500 was something like 11.8%. So no time to panic. I wouldn't say that. There was a down year in those 7 times, and that was right on the kind of the verge of the dot-com bubble. So yeah, it doesn't mean the market's going to go up. It doesn't mean the market's going to go down. I think it goes back to our conversation from last episode, which is it's important to tune out the news and just focus on what you can control, and then move forward from it. Pessimism sells. I'm reading Morgan Housel's book, the Psychology of Money again. I try to read that, every 6 months or so. And he talks about pessimism versus optimism. Pessimism just sells. It just does. People are much more willing to read an article that has a negative headline than a positive one.
Isn't that the kind of like the same idea with the news, right?
Same concept.
That's why there's always negative things being reported on the news. It's just negativity, and negative headlines tend to sell a little bit better.
Yeah. And now if you're looking to buy a home, good luck.
I don't think I'm ever buying a home at this rate, right?
Rates are going up, right? I mean, it's just unbelievable. Rates are going up. So I think the average mortgage rate right now is closer to 4.5%, 4.5%, which is higher. And so theoretically, higher interest rates or higher mortgage loan rates would mean, less demand for new homes. That hasn't happened. So the average price in the U.S. of a new home or of a home purchased, it just topped $400,000 for the first time ever. I mean, it's just incredible.
So you have these home prices at all-time highs with demand not slowing down. You have limited supply of houses, so low supply, and you have rising interest rates. I couldn't think of a worse time as myself, a first-time home buyer, to get into the market. It's like, why not just rent for the time being and say, that's the problem with rents too. Rents are way above where they were 12 months ago. So you got to think, what's the lesser of two evils? Is it renting at all-time highs with interest rates on the rise, or is it buying, or is it renting for the time being and kind of waiting out for a little bit?
And you don't want to do what I did. I bought my first home, which was in 2006, and my interest rate of my mortgage was 6 7/8. So if you think this is high, I mean,
this is a deal compared to that.
Yeah, exactly. But I bought with the idea of, I could probably sell in a few years and make some money off this and move to my next home. And then the financial crisis happened, and I was it was a great place. So I happily stuck there, but that wasn't my plan.
So your plan was initially a couple years. How long did it actually turn out to be?
Yeah, 10 years.
Wow.
12 years. So it's we talk to clients about this sometimes too, which is if you're going to buy a home, buy it for the right reasons. You really want to live there. You appreciate the schools if you have a family. Allows you to do other activities around it. And that should be the deciding factor, not if I buy today, will this be worth X in whatever number of years your timeline is.
Yeah.
A home should really be about, does it meet your lifestyle needs? That's really what it is. I actually read something interesting too. I think in England they can do this. They because rates are a lot of folks refinanced, right?
Yeah.
In the past couple of years because rates were so low. I mean, money was my mortgage, I refied at 2.75%.
But now the
I know.
outlook for refining is pretty dim, right? It's like everybody
Yeah.
who would have potentially already refied, and now not only are rates on the rise, but you have such a small pool of folks who actually need to refi. So a lot of those lenders are going to struggle just in that department. Is the refi business is probably going to struggle for the next, I don't know how long.
I would imagine. I read a stat the other day, which was back before the financial crisis. I think 1 in 4 folks had refied, and this time around, 1 in 4 folks hadn't refied, and this time it's 1 in 100.
Wow,
it's like everyone's that they could refinance their loan refinanced.
Yeah,
so I think you're right. It's going to be a struggle with rising rates and that segment of the real estate market.
I wonder
lenders.
what percentage of folks had floating rate, right? Like floating
minimal
rate loans back in the
Maybe
financial
that was
crisis.
a stat, Tim. That might have been a stat,
Yeah.
which was 1 in 4. That's what it was. It was screwed that one up. 1 in 4 had floating rate loans pre-financial crisis, so in 2007.
Okay.
And now it's 1 in 100.
So 1 in 4 to 1 in 100.
Yeah, 25% versus 1%.
And that's just
wild.
saying that now, this time around, the housing bubble that they're talking about, right? Potential. Is it that the housing market is getting stretched? What you're trying to say is that it's not the same as it was during the housing meltdown.
Yeah, there's certainly more risk than just that. But that the risk of payments going through the roof or getting to the end of that balloon interest period, it's 5 years, 7 years, whatever it is, and your payment going way up really quickly is less likely now that most folks have fixed rate mortgages.
Yeah.
So that's just the evolution of that industry. But what I thought was interesting is, and this is why I said the first stat, the first way I said it, is that because so many people have such low rates right now, I think in England, your loan can be portable on your home, which is such a foreign concept to me or folks in the United States, which is you have a loan for 2.75%. You want to move across town or to a different town, wherever, that you can pull your loan with you and keep that low rate. That'd be really cool. I think that I saw it mentioned because the fear is rates go up. Everybody's locked in this really low rate that at some point it curtails buying, right? Why would I get out of my 2.75% if my alternative is 5.5% or 6% or whatever it ends up being? I pay so much more in interest. So if you could make that a portable loan, how cool would that be?
Does anybody besides England currently do this, or is England the only one?
I don't know. Something to look into.
Yeah.
I'm not sure, but I'm pretty sure somebody in England who knows who they are. They said they could do it. It could be completely wrong. Yes. But it's a cool idea nonetheless.
It is a cool idea, thinking of ways to, when the market gets to a certain point, to not, restrict buyers in any way from wanting to move. Because
Right.
that does pose a very large issue, is the interest rate. Why would you buy a new home if your interest rate will be 2 or 3% higher?
Yeah, exactly.
Yeah, wow.
We'll see. At some point, there's a crossover point. Right now, it hasn't affected demand, and maybe it has something to do with supply too. That there's not much supply out there, but we'll see how the spring unfolds from the housing market standpoint. But at some point, interest rates hit a certain point where you're just not as incented to move from your current location because of your current loan, and then you can't afford as much. So your mortgage payment is determined by your income, and that mortgage payment is affected by interest rates. Higher interest rates, higher payment, meaning less of a home you could theoretically buy with higher interest rates. So that'd be a cool idea that would keep the housing market moving. It would incentivize folks to be able to shift homes or change homes and keep and not worry about that higher payment.
Yeah.
Who knows?
Interesting.
Yeah, I'm sure if we polled the realtors we know, they'd be all for it.
They probably have a better idea on
Let's talk about crypto.
the hottest topic in our world, right?
Yeah,
Everybody's
I
asking
don't know,
questions nowadays.
getting a lot of questions from family and from clients. Definitely more than definitely more than 2021, and that was higher than it was in 2020. So these questions are kind of ramping up, and it's interesting because it's I was back when I first started in this industry. I was already coming into the big expansion of the internet. It's kind of already happening. This is a little different. We've seen this from start to finish. Not to finish, but from the starting point of the evolution of this. I guess we can call it an industry. And I know I wrote a few pieces on it. That's on our blog. But
what type of questions are you getting from like friends and family? Like, what is it? How do I invest in it? What are the potential risks? Like what type of questions are friends and family asking you?
Yeah, general questions. Like usually, should I be investing in this? Right? People have seen these wild returns, thousands of percents over time for a variety of different cryptocurrencies. So, some folks are asking what it is, right? And then others saying, should this be a part of my investment portfolio? And trying to understand it these days is harder than adding it to a portfolio.
Yeah.
So
there's
so
many out there, right? There's so many choices.
So many coins.
It's so hard to kind of wrap your head around all the different coins and what they're backed by, like what their purpose is. I mean, you have Dogecoin. What is the purpose of Dogecoin, right? Like, what is its actual value? Like, what? I don't know. You're probably more equipped to answer that one. To me, it has no value except for, I guess, what people perceive as value.
Yeah, that sometimes is enough, right? The perception of value is enough. But ultimately, I think you're right. I think there has to be in the long run, there has to be utility to a certain extent. Yeah, and I think some of the crypto, some of the coins themselves, some of the currencies themselves, and some of the platforms that are being developed do have significant utility. That's what's so exciting about this, And so yeah, but it's easier to buy these days crypto. You can go to, a variety of different exchanges and buy crypto, and it's easier than actually explaining what cryptocurrency is. I'm going to give it a shot real quick. I'm going to try to go through just really quickly what cryptocurrency is, without going down a rabbit hole too much. But so the whole idea behind crypto originally, and the first one was Bitcoin, right? And was for it to be a decentralized, I'll explain what that means in a second, digital token that uses cryptography or some sort of code to regulate the security and creation and distribution of whatever the token is, in this case, Bitcoin. We'll use Bitcoin as the example because I think it's easiest. So what does that mean? Digital means it's nothing you hold in your hand, right? It's just online. It's on the internet. Decentralized means that there's no one governing body, right? The U.S. Treasury controls the dollar, right? We saw in the last 2 years, you can print money and affect the supply of money, and that can impact the value of the dollar and a variety of other economic metrics. This is decentralized, so that the control gets pushed out to either the owners of the currency or those that control the network. And that gets, again, going down a rabbit hole there. But the idea is there's no one governing body over it. It's a democratized version of currency. And I think that was the original, reason behind creating it. It was an alternative currency that had a fixed supply, that wouldn't be subject to the same pressures that a normal currency would be, or a normal country controlling that currency would be. And it gave somebody an alternative. That message or the utility of it has evolved over time. So the actual technology itself is this blockchain technology, which in essence is a storage and it's part of its security too, but there's a storage and a ledger of all transactions that have ever happened on the Bitcoin network, for example, right? So we had this hack recently. What was it called? Roman?
Yeah, it was. So the Ronin, I was reading about
Ronin, yeah.
It's a bridge, right? It's a cross bridge, but it was the game Axie Infinity. I think.
Right.
I don't know if I'm saying that right.
So the reality is, and that was Ethereum, so it's a different digital currency or token. But that was all tracked. We know. I can go look, and you can go look, and anyone watching or listening to this can go look and see where that Ethereum lives right now. It's in a wallet, right? And so the odds of getting that back are much higher. And that's kind of part of it is that there's this transparency and a tracking of all transactions. And you have a wallet address. It's not your name, but it's a wallet address. So there's some level of anonymity to it, right? But ultimately, there's a tracking of all of this. Why is that valuable? I think it became valuable. Two things. One is, if you look at the history of the United States, without going into a ton of detail, we went off the gold reserve during Nixon. The only thing backing the U.S. dollar was the full faith of the U.S. government or Treasury. And to get out of problems, or if we went to war, we would print money. And when you print money, it creates an inflationary environment and devalues the dollar, the currency you hold. So this happened across all countries, right? And so by going off the gold standard, it gave permission, right, for the Fed and Treasury to just print money. And that sounds like it's an easy way out of certain scenarios, and it was helpful certainly during coronavirus. But it leads you into this path of devaluing the currency that you use to buy groceries every week.
Not only devaluing the currency, but now we're talking about the risk of recession induced by the fact that we have to raise interest rates, right? So we're coming out of quantitative easing, and now we're raising interest rates, and people are saying, are we behind the yield curve? And now it becomes this big game of how fast do we raise rates? What percentage each time do we raise rates? And it becomes a debate where I guess that's the whole idea and the whole premise behind what you're discussing as far as the origination of Bitcoin, is that it gives, instead of power between a few or a central bank, there's no longer a need for a central bank, but it gives the power to the masses. And having that finite supply doesn't allow there to be this inflationary environment where now the central bank has to be reactive to things like the coronavirus.
Well, that's it on the head, is that there is, for Bitcoin, for example, there's only going to be 21 million Bitcoin ever, right?
Yeah.
Period. That's done at that point in time.
So is that a better hedge to inflation than gold, right?
Well, that's to be seen, right? To be determined. I think that's, they're called crypto maxis or Bitcoin maxis, right? That they'll use the inflation numbers to support the price of Bitcoin. But no, I mean, if higher inflation doesn't mean that the price of Bitcoin goes up. Theoretically, it makes sense that if I don't have an expanding supply of a currency or coin, or digital coin in this case, then my currency in that regard should hold more value over time. That to me is the interesting thing about Bitcoin in particular as a store of value, right? Is that over time, and we'll talk about how these things happen from a volatility standpoint in early stages, but over time, I think it could be a hedge against inflationary environments or a protection against the deflation of the currency you use on a day-to-day basis.
And when you compare it to gold, right? Gold doesn't have that same finite supply because it's constantly being mined. So you're saying finite supply, was it 21 million Bitcoin versus gold, which is constantly being mined? I guess that's the argument for Bitcoin versus gold as a hedge against inflation moving forward.
Yeah, I think you're right. I think so. And what's more exciting, I think, about this space, and again, we probably just, I don't know if I explained that well enough how crypto works or not, but But what's most exciting about this is that the technology on which the kind of the chassis on which this sits, that blockchain technology, I think is groundbreaking. So, I think there's this effort right now to understand how that all works, right? What is the blockchain? What are nodes? How does my Bitcoin go from my wallet to your wallet, Tim? That sort of thing. It kind of reminds me of the early internet. It's like, well, how do I buy a book online? What's actually happening behind the scenes? Now nobody cares what happens behind the scenes, right? You just want your, hand moisturizer in 2 days or whatever it is, right? From Amazon.
So maybe 10 years from now, we won't care how the blockchain actually functions as a technology.
I don't know for sure, but that would be my guess.
All we're going to care is that, like, if you're a recording artist, you get paid the way you should, right? That's a great discussion.
That's a great example, which is the utility of this is that the person who creates, now we're getting into NFTs, which I know we're going to probably do another whole episode on at some point, but the person who creates the thing, music, art, a website, computer program, anything, right? Can lay claim to that thing and backed up by the blockchain. Remember, there's a ledger, there's a transaction, there's a history of all of it.
It's funny. I was listening to somebody on TV, one of these big time investors, I forget exactly who it was, but they said Bitcoin as a currency is debatable, right? You can take either side as, do you think it's, the way forward as far as currency? But as a technology, so blockchain as a technology, it's inevitable. It's here to stay. So they're saying, okay, as a currency, you can debate it, whether or not you think that it's here to stay. But blockchain as a technology it's inevitable. It's the next coming of what was originally the internet. That was like the 30 years ago at this point.
Yeah, I think it sounds crazy to say, but I think it's that monumental.
Yeah.
That there's this shift in the way we track ownership, or transaction history. And it sounds like that's not a big deal, at least when I'm hearing myself say it. But think about like title insurance, right? So having bought and sold a home or two, you have to have title insurance, or you should have title insurance when you sell a home or buy a home. But what if that it was all tracked on a blockchain type of technology, and therefore there was no need for title insurance because everything was transparent. You see the entire history of what was on the history of that home in this particular case. And if so it's the technology itself, and believe me, it's going that direction. If you look at private equity or venture capital, it is flowing into that space so quickly. And if you think your industry, including ours, is not on the there's not a bullseye over it when it comes to blockchain technology, you're missing the boat here.
You think it's going to affect every industry, no matter what?
Car insurance, car titles. I mean, just down the line, any form of ownership. I really believe that in 10 years, I'm trying to think of 10 years should be the right number, but I think 10 years. I think all of us will be working off of, in some capacity, the blockchain or blockchain technology. And it could be either day-to-day work, or it could be that you own an NFT, right?
That's an interesting discussion.
Yeah, we'll get there eventually.
Everybody's going to own an NFT in 5-10 years.
I think everyone's going to own one.
Yeah.
And everyone's like, you're crazy. But you also remember that when the internet started, you said, why would I buy a book from a guy sitting in a garage? And now Amazon's one of the largest companies in the world. There's this, we're on the front end of it. And I think we'll have this pop up on the screen in a second here, but there's this adoption curve, and where it kind of flows from we'll have it come on the screen here. But from innovators to early adopters to the early majority, and then to the late majority, and then the laggards, right? But eventually everybody gets there. It's this, if you think about it from the internet perspective, it's the same kind of idea. And I think we're in that second phase now, which is that early adopters. The money's starting to flow there, but people are still wondering, what is this? What's the utility in day-to-day life? And that's what's coming. That's what's so exciting about the space.
There's still a lot of pessimism out there, right?
Ton of pessimism out there. But think about it. That was what it was with the internet too. Yeah. There was this the internet's not gonna happen. And in fact, we have another. We'll pop it up on the screen too here too, which is and it's funny reading it, but the disparity in the original opinions of Bitcoin or cryptocurrency, several years ago to just last year or the year before. I'll give one example, and I think you have one too. Yeah. So here's one. Goldman Sachs. Goldman Sachs lists, this is the original one several years ago. Goldman Sachs lists 5 reasons why Bitcoin is not an asset class nor a suitable investment. Pan forward. Jump forward. Exclusive. Goldman Sachs restarts cryptocurrency desk amid Bitcoin boom.
Yeah.
I'll do one more. Bitcoin is useless as a payment mechanism and ridiculous as a store of value. That's the ex-PayPal CEO. Then flash forward. PayPal's entry to crypto following long build-up in expertise. Like it's.
And what's the time difference between those two statements? Is it like a year?
I think 5 years.
Yeah.
I mean, maybe at the most, Tim, 5 years.
I mean, I have some, and this is still going on today. I mean, there's a couple, and these were like, 3, 4, 5 years ago. But you have these big time investors and voices, at least in our industry, like Charlie Munger and Warren Buffett. They're both in their 90s. This is something that obviously they don't like. They want no part of. But Charlie Munger, he's a little extreme. One, he calls it rat poison. But he also goes on to call it disgusting and contrary to the interests of civilization. I mean, talk about pessimism, right? Coming from a guy who's, he said this when he was, 95 years old?
Well, we got to think about what's the incentive, right? What's the incentive behind the opinion? And what incentive does Warren Buffett or Charlie Munger have? Really, I mean, they're worth billions and billions of dollars, to understand this in their 90s. I mean, that's the thing, and maybe they end up being right. I don't know. Yeah. I can't. This with the momentum where it is right now, I just don't see that happening. But I think it's almost the opposite of what Charlie Munger said, right? Which is, how is it a detriment to society if we have a currency or a store of value that we know stores value, right? Isn't there value in that alone? Yeah, and I'm just talking about Bitcoin at this point in time, not to mention the variety of other technological advances that come from blockchain technology, and that further us along. There's always going to be this pushback, especially from folks who've made their living and career off of nothing related to it.
Yeah, and they've amassed these fortunes doing things one way, and now you're talking about guys who've been around doing this for the last 75 years. Why change anything now, right? Yeah. And it's new to them. It's a foreign concept. Maybe it scares them in a way. It poses a threat to the traditional way of doing what they've done to create the fortunes. I actually have another interesting one from who people perceive as one of the better CEOs in our industry is Jamie Dimon, the CEO of JP Morgan, where he starts off by saying it's a fraud and then goes on to say it's worse than tulip bulbs. It won't end well. Someone is going to get killed. And then he says, currencies have legal support. It will blow up. And then I guess he finishes that in another statement saying he would fire any employee in a second who traded Bitcoin, noting 2 specific reasons. Number 1, it's against our rules. And number 2, they are stupid. I thought that was an interesting 2 reasons. Pan forward, so that was 2017, right? Pan forward 1 year to 2018. The blockchain is real, Dimon said in an interview.
Right.
You can have crypto dollars in yen and stuff like that. So 1 year, he talks about firing any of his traders who deal in Bitcoin, Also talks about allocating, I think it's on your graph, 1% of portfolios to Bitcoin, right? From a year prior, calling people stupid for even thinking about trading in Bitcoin or owning Bitcoin. And that's one of the most renowned CEOs of one of the largest banks, right? JP Morgan.
It's funny to watch it in real time. Again, I was just in college when really things were picking up in the internet, and it was LexisNexis back then, and there was some other stuff and Napster. I don't know if you remember that or
Napster.
Not. Some girl got sued, and I think Napster made an example out of her for taking music and downloading it, and unfortunately she was the example. I don't know if it helped or not, but yeah, you see it over and over again that there's this, and again, it's cool to see it real time, where every major investment bank has now has a department dedicated solely to crypto and blockchain technologies. And even here, I mean, we up until this past year, we never invested on behalf of clients in anything crypto related.
Yeah.
And you really still can't. There's some outlets to do it, but you really still can't. You can't buy the digital currencies themselves. But Quaker created a blockchain index, right? So that the companies that are kind of tangential to that industry, to have some level of exposure to it. That's I think that's where things are going. You'll see more Bitcoin ETFs. We can tie as a whole other conversation. There's some futures ETFs now that are available, but not the actual coin itself.
And that's only going to drive the path of adoption forward a lot more quickly than it would other. But like, what is your perception, or like, what is your thinking behind how this will be adopted in, I guess, different countries, right? So you would think it would be adopted first in countries with unstable governments, third world countries, no real banking system, low access to banking, versus place like the United States, who has a central bank, has a very well built out financial system. Like, I guess the one country, was it El Salvador, that has adopted, and the president of El Salvador is trying to encourage everybody to buy Bitcoin. Is that what it is, right? Do I have that right?
Yeah, and they're issuing bonds backed by Bitcoin.
That's it.
Yeah. So I think you'll see more of that. Just think about it from a if you're a citizen of one of those countries with a government that's not, that's unstable, and therefore a currency that's unstable, or just runaway inflation, that sort of thing. And that I'm going to use the term dollars right now, but not dollars. $1,000 today is worth $50 tomorrow. But if you can exchange that $1,000 today for something like Bitcoin that holds its value better, right? Doesn't lose 95% of its value. And then a week from now, convert it back to your currency to buy your groceries. You're not losing the value in any way. You don't actually have $50. You've got the $1,000 worth of Bitcoin that you bought 1 week ago, which will hold its value theoretically better than a destabilized currency and country.
Yeah, that's interesting.
And so there'll be this. It's already starting to happen, but there'll be technologies that will, for no fee, I'm sure, convert, in an instant, in a payment transaction. You buy a Pepsi at the convenience store, and it'll instantaneously convert your Bitcoin or whatever other currency, digital currency, into the denominations of the country you're in, and then and pay the teller in that currency, and the convenience store clerk or business can convert it immediately back to Bitcoin. So the transaction can still happen. I think that's where I think people are missing the boat with Bitcoin. There is some truth, I think, to the idea that, I'm not going to go buy a car with Bitcoin. I know it sounds fun to say, but could I, in an instantaneous transaction, use my Bitcoin wallet to convert immediately to US dollars, buy the car, and then go on my way, right? So it could be the exact same transaction as putting a credit card in or waving your phone over top of it, the payment system. but the transaction happens. The technology converts that automatically for you.
Yeah.
So I do think we'll pay for stuff in cryptocurrency. It's just going to be in a roundabout way, but it'd also be instantaneous. So it's not going to feel like we're converting. We're just using it to buy stuff. There's a whole conversation, Tim, about what that means from a tax standpoint and how the U.S. government gets their hands on things. But
yeah, I think that's
I'd be shocked if that doesn't happen in the next few years.
Okay. I was going to ask your timeline for that, but that's interesting. That the tax implications of those types of things is really interesting debate. Or you tell me something we're talking about. I know we started talking about this before the show and talking about like technology evolutions, and you were telling me something. I think you had a quote by like Henry Ford or something like that, right? What was that?
I don't remember.
I thought it was interesting, but you were telling me about that the other day.
I'm full of quotes. Oh yeah, here it is. Henry Ford. If I asked people what they wanted, they'd ask me for faster horses. Right?
Yeah.
It's so applicable to this. There's always going to be it's tough to see what's next when you're just worried about living your life day to day. So it's not again, it goes back to that adoption curve. And at this point where there's early adopters, there's always going to be this divide. That's always what it's been. Yep. We use the internet analogy all the time because it's a simple analogy. But again, no one's going to care how the blockchain works eventually. It's just going to be that they know how they get their title insurance. They don't know that they don't need title insurance again. That's the only thing they're going to care about. Just like we don't care about why we hit buy now on Amazon. What's the code being sent to Amazon? We don't care about that stuff. We just care about that they get the order and the order arrives on our step 2 days later.
I mean, the end result is really all that matters, right?
That's right.
At a certain point in time, and you just stop caring about. I mean, if it's too difficult to understand, which it is a very difficult concept to understand for many, kind of very, very similar to the internet in the early days. But at a certain point, you're right. They stop caring day to day about how this stuff works in the background, which is really interesting.
Right. And just start using it.
Yeah.
And just start using what's built on top of it. And we go back to the client question because we get a lot of questions these days about it. It's not right for everybody. And why isn't it right for everybody? Not because the technology doesn't make sense in the future. It's super volatile, right? So we just had a Bitcoin drawdown. It was almost at $70,000 per Bitcoin. It dropped to, what was it?
Like 35,000, something like
maybe lower.
28,000.
Yeah. It can lose 60% of its value in a month or a week. It's super volatile. But we went back and we looked at some of the early tech companies like Tesla and Apple and Amazon and looked at their drawdowns. I think people will be surprised to know that some of these companies, Apple, Amazon, Microsoft, we'll put a chart up. They weathered drawdowns of over 75% in some cases. And sometimes I think it was Apple. I think it drew down 75% 4 times.
Wow. That's incredible.
You don't think about Apple as just this gigantic company.
Now, how old is Apple when this happens as a company?
I don't know.
Is that like a year in, 5 years in? Like at what point?
It was closer to IPO. Right. And that's how that's what happens in every early adoption technology. If you look backwards, that it comes with volatility, and some people can't stomach it, and that means it's not right for you and shouldn't be a place in your portfolio. But if your risk tolerance is high enough, which we talked about in the last episode, then this could be a place for this in the portfolio.
Yeah, and I understand you're comparing, Bitcoin to these companies. Right. And I understand the drawdowns. You're comparing it on a basis of volatility, but I don't think it's quite apples to apples as far as these companies have, products and profits and consumers. So it's not an apples to apples comparison, but from a pure volatility standpoint, it's just understanding and trying to stomach that volatility in the early days can really pay off if you're able to kind of take that risk and take that, as we call it, leap of faith in the early days.
Yep.
But it is interesting.
It's kind of going off course here, but and I'll ask you the question. I think, excuse me, I think that we look back at technology, that it's gonna be like a comment that it's gonna come back to probably bite me. But I think young people are almost always right. Right, just follow what young people are doing. So I'll ask you. You're younger than I am, but like, what's the most popular social media site now?
It has to be TikTok.
Okay, I mean, what was it 3 years ago or 2 years ago?
Easily Instagram, right? I think,
okay. And then
I
2 years
guess,
before that,
yeah,
Facebook.
Facebook,
I don't know,
right? Yeah, because Facebook to Instagram to, I guess Twitter is in there somewhere, but
Snapchat probably in there somewhere.
Snapchat.
That's in 6 years. But so my point is, young people will drive the next industries.
Yeah,
and this is one thing I recommend to folks if we have clients that ask me, hey, my son or daughter is looking for a job, or they just got out of college. There's an outlet for not only to educate yourself from a crypto standpoint, but there's outlets for jobs too. So there's just so many jobs being filled in the crypto space. And I think that's where younger folks are flocking to. And they're flocking there for a reason, because usually young people pick the winners from a technology standpoint. It's just kind of been what it's always been.
Yeah.
So I'm out of that now because I'm not young enough, but I could talk about it, I guess.
Yeah, TikTok. I think Facebook just reported its first decline in, was it daily active users, at the expense of, and they're blaming TikTok for stealing their, user base.
Yeah, do you see that they were? I mean, they hired that company to kind of like attack TikTok.
The consulting firm to.
Yeah.
I just read that this morning, actually, that they're putting out these different targeted like news about TikTok, and obviously it's what, ByteDance, is that what it's called? China-based company. Anyway, yeah, they're putting out these different narratives in the news about why you should stay away from TikTok, and it's going to become a battle. I think what Mark Zuckerberg and now what's called Meta is really banking on is the metaverse. But just like NFTs, that's a conversation for a whole nother podcast.
We'll get there. That the metaverse is going to be built, I think, on top of blockchain technology. You're going to be paying for things in tokens, and that's kind of what this recent hack was. Yeah, but we'll talk about that again in the future. I think that's a good place to stop for crypto.
Yeah, I think I need to do some research before we discuss that one. Everybody, I mean, we're in such the early days of even discussing the metaverse, but it seems like companies are already moving in that direction, which is interesting.
Yeah, I don't know if I'd bet against Zuckerberg. I know no one likes him, right? But I don't know if I'd bet against him.
No one likes him, but I'm with you. Don't bet against that guy.
There's a reason he shifted the entire focus of the company. Yeah. That's why their financials, I think, weren't so great recently, as they poured so much money into the new concept of the metaverse, and lost some users, and then but you're going to lose users if you're shifting the entire focus of your company. That's a bold move. We'll see if it pays off. But there's a lot more money. Last thing I'll say about crypto, we'll put the chart up here too. This past week, so this would be the week of third week of March, right? For this year was the largest flow of venture capital to crypto or crypto adjacent companies. Wow. Decentralized finance companies, NFT projects. It was $1.5 billion in a week.
Yeah,
so it's just this immense amount of money going this direction. Young people are in it, and money's flowing that way.
Yeah, I mean, I read a stat that almost $33 billion by venture capital firms were poured into NFT startups in the last year, which is incredible.
Yeah, I think I don't have a Bored Ape yet.
Yeah,
nor can I afford one? I don't think.
I think the Bored Ape discussion is a topic for the NFT. I think we'll kick off our NFT episode with the Bored Ape, even though it did launch quickly. I guess a quick overview. It launched on March 16th, and almost a week later, the market cap of the what they're calling Ape Coin was $3.7 billion.
Yeah. Yeah. It's
I
wild.
will give, so they call it ApeCoin DAO. So DAO meaning decentralized autonomous organization, which is
Right.
like a new type of government structure that runs on the blockchain and theoretically disposes of hierarchy, a real for the people, giving the power to the masses, exactly what we're talking about. But it's interesting when it goes into the breakdown of who received this ApeCoin DAO, right? So you own ApeCoin, you become a member of ApeCoin DAO, this organization. You can vote on certain things and how you want the community to be run. But it's interesting. So it says the DAO's treasury received 47% of the tokens. Owners of Bored Ape Yacht Club NFTs and the NFTs of 2 spin-off collections were able to claim 15% for free. 15% was almost $2 billion as of last Friday. 1% of ApeCoins went to Jane Goodall Legacy Foundation. So,
Okay. Charity. Yeah.
yes, but she was what?
She was yeah.
Save the Monkeys or Save the Apes. I guess she was
Yeah.
the leader with that. And then the rest of what they call the airdrop went to launch partners such as venture capital firms, the company behind Bored Ape Yacht Club, which is Yuga Labs, and Yuga Labs founders. So when you take a step back and you think this is a community built for the people, with the people in charge, power to the masses, and then it says venture capital funds and companies accounted for 37% of what's supposed to be a decentralized vehicle for a community-led initiatives. So over a third of this decentralized network or community is now in the hands of venture capital.
Yeah. Yeah.
Which is interesting.
Well, we can talk about that the next time we talk about NFTs too. That I think there's going to be a natural progression towards that. It's the same idea that the internet was supposed to democratize. I guess the evolution of the internet to democratize the exchange of goods or ideas. It became centralized eventually. Amazon, Google, etc. So, I don't think that's the. Maybe it's not the direct path. I don't know, but I don't need to say direct path. I don't think crypto takes the same direct path or NFTs the same direct path that the internet does. But I think it's something to keep an eye on for sure. All right, Tim. Let's put a pin on this.
I think that's time.
People's eyes are glazed over at this point. Probably talking about crypto. It's interesting.
What are we calling this? The our beer rating.
Oh yeah, our new beer rating name. You ready?
Let's hear it.
It's called Pop Chart. Going with the theme. We picked the theme out of mixtape. This is called the Pop Chart. Pop being like beer. Hopefully I didn't have to explain that. But
do you want to introduce the beer? I'll show it here on the screen.
Well, I'm going to let you. You've created the rating scale from 0 to 10, Tim. That was your doing.
So we have, what is this called? So it is brewed by Iron Hill Brewery, right?
Yeah, it's Iron Hill. It's right down the street from here. There's an Iron Hill.
It's got a Christmas theme.
It does?
Right. I mean, the colors, right?
Oh, yeah, football. Yeah, I guess
it's like football, Christmas. Yeah,
I think it's an Eagles related beer.
Okay, yeah, it looks like a holiday beer almost, but cool.
Another IPA, your favorite.
Yeah. So you got this today, fresh, right? It was freshly brewed. You're telling me?
I think it was freshly brewed. I don't know if there's a date on it. Oh well, hold on. This says February. That's not super fresh for an IPA.
I think you were given some false information over at Iron Hill.
So my wife's family has a little bit to do with Iron Hill. So on her mom's side, started Iron Hill back in the day, and I think private equity.
They started Iron Hill.
Yeah.
Wow.
So they not my mother-in-law, but her side of the family, and yeah, I think they were bought by private equity. I think they're still working in some capacity there, but every time we had a either like a get together or like there's some birthday party or something. Either it'd be at Iron Hill, or I mean, I must have like a dozen Iron Hill gift cards from over the days. That's like support the family and that sort of thing.
Iron Hill's great.
Yeah, I was just there for lunch today. All right, let's taste it, Tim.
I mean, I got to learn how to pour this next time, but yeah.
All right, since this is your rating scale,
we get one sip or we get two, or what's the deal? It's like one bite, everybody knows the rules, like, right? But maybe we should make it
as many sips as you want.
2 sips
as you need to.
Get a real gauge for it. All right. So 1 to 10. I would give it a 7-1.
So it was less than the last one. The last one was Grim. I forget what it's called now. We'll flash it on the screen here. And then this week,
Catch Wave, right? Grim.
Catch Wave, yeah.
Catch Wave. I really enjoyed that beer. I thought it was good. I mean, not to say this isn't good. I think it's almost unfair to Iron Hill, because now that I gave such a high rating on the first episode, I need to backtrack a little bit.
Tim, you got a lot of problems with this rating scale.
I know,
and they're all you're doing.
Well, the first one we try to do 1 to 5. Now we're doing 1 to 10. But
7-1's good.
It is good because I'm basing it off of the last beer that we tried, which I thought was slightly better. I think I gave that like in the mid 8s. So I'm saying low 7-1.
Yeah, that's pretty good.
Yeah.
I'm gonna go. I'm gonna be in the 7s too. It's pretty good. I'm gonna say it's a 7.5 though. I'm gonna go right in the middle of 7 and 8. It's a good beer.
Yeah, solid beer.
Cool. Want to talk about what you're watching? Has it changed at all since the last time we did this?
I didn't know. I was watching Ozark, and there's only 7 episodes. I guess the next 7, is it the same season or a new season or coming out end of April? It kind of stopped right in the middle.
I think. Are you on? What season are you on? Are you in the one from
the newest season? Yeah, the one that
okay.
just came out.
There's one they stopped filming in between. I think because of COVID. That was the one before this one.
Yeah.
This past season I thought was really good. Ozark. So
yeah.
I don't know if you're there.
I thought it was great.
What point are you at right now? Do you remember?
It's like the very end is where Wyatt and what's the older lady's name?
Oh, I forget.
Who owns the farm?
Yeah.
Yeah.
He leaves.
No, but the guy from the cartel, so the cousin, he came in and killed them both, and that's how it ended.
Okay.
And then Ruth comes in and she sees she thinks it's the Casey mob, but then quickly realizes that it's not.
Right.
So
yeah.
Now she's it kind of ends with her on the way to go find whoever killed her cousin.
Wyatt. Yeah.
Wyatt.
Yeah. We finished Jack Reacher.
Oh yeah, how was that?
It's all right. Again, it's you could it's not very difficult to follow. It's just a kind of mindless entertainment. So that was okay. I'm trying to think of. We watched a documentary recently too. I can't remember the name of it. Oh well.
They got a documentary coming out on the. I don't know if it's already out on the Lakers, like Showtime or something like that. I think it's kind of going to be like, what was it, the Michael Jordan one?
Okay.
Which was really good.
Yeah.
The 10 episodes.
The Lakers, huh?
Yeah. Should be interesting. It was like Magic Johnson and all them. I'm really interested in seeing that.
Yeah. You could have a Sixers one too.
I mean, that'd be great.
Pretty historical team.
Yeah.
Where do you think the Sixers right now? Are they what's your opinion? How's it all working out?
So I have this discussion with my dad all the time, and we're looking at like the Suns game, right in it to the end, best team in the league. And we're right in it. We're winning. We don't close it out against the Bucks. You know, I will say right now, I don't think Embiid is going to win MVP. A recent poll just came out showing that Jokic is going to win in a landslide. I think Embiid deserves MVP. I just nationally, I think the voters will go towards Jokic for whatever reason. I like where the Sixers are at. Me and a buddy debate this all the time. I think they're a year away. Like I saw when Embiid came out of the game and they went on the run in that fourth quarter, I guess the beginning of the fourth quarter, Giannis scored 17 points when Embiid's out of the game. Like, you just can't have that. Embiid can't play the entire at 7'2", 280, whatever he is. He can't stay on the floor the entire game.
I'm going to tell you right now, the odds, the favorite on some betting site, I'm not sure which one it is,
to come out of the East or to win it all?
No, for MVP.
Oh, for MVP.
Yeah, he's still the odds-on favorite.
I think it was released by ESPN. Came out that he was going to lose in a landslide to Jokic.
That was like the straw vote or whatever. I'm not sure that's very representative of the actual voters. I don't know. I'm disappointed in Doc Rivers.
Yeah, I think everybody is.
To your point, the against the Bucks, man, with Giannis. I mean, the last time they played the Bucks in Milwaukee, remember who shut down?
It was Paul Reed, right?
Paul Reed.
Yeah.
So in that post game, he didn't play at all.
Same discussion. Doesn't play at all. Paul Reed. Why is he not in the game?
I don't know.
It's so weird to me.
He was asked. Doc Rivers was asked after the game, what By the way, I have no time to watch the game. I'm always with my kids. It's like our bedtime routine right then. So I catch up on the stuff after the fact. But so I saw the next day that he was asked about that. Why Paul Millsap over Paul Reed? And he said, we just that was the matchup we wanted at the time. It was like, it wasn't a good answer.
Why?
I'm wondering if he's
vet.
What do you think? If he goes, if they go out in the second round, does Doc get his job back? Is he gone? Second round. That's way underperforming, right?
I think if it's like take it a step further, I think if it's like a sweep in the second round, if we get swept, I think he's gone. If we go to like 7 games, I think he stays.
Say 7 games in the second round.
I still think he stays.
He's back?
I do. I know. You should ask my buddy about. He can't stand him, but
yeah,
I think they're a year away. They need a couple pieces. I think swapping out Tobias for maybe like a Bradley Beal, if that's possible, or even I was thinking like I read something about like swapping him out for more depth. So if you traded him, theoretically, not saying that the Mavericks would do this, but Spencer Dinwiddie and Tim Hardaway, it's like you get some scoring, you get a deeper bench.
I'm going to tell you right now, the Dallas Mavericks will never trade with us again after trading for Josh Richardson.
Yeah, that's bad.
For Seth Curry, and I can't remember what else it was, but that was just a awful trade for them. Good for us.
I think right now, though, it was a terrible trade. But I think right now, with us losing to the Suns and us losing to the Bucks, I can't say, like, as a fan, I want them to win every game. I'm not ever trying to lose. But I can't help but look at where the Brooklyn Nets are in the standings and saying, would I rather be the 1 or the 2 seed, or would I rather be and play the Nets in the first round, or would I rather be the 3 or 4 seed and avoid them in the first round, hoping that the Bucks can knock them out, because I would rather play the Bucks than the Nets, me personally, or one of those teams takes them to like 7 games and hopefully tires out Kevin Durant. I don't, probably not, but you got to hope something. I am more scared than the Nets than any team in the East.
Yeah, they could be good. It looks like Simmons is not going to play at all. So,
herniated. Like, what would be, I guess, to close out our podcast? We are getting a little long here. What would be your ideal first matchup in the first round?
Oh, first round matchup.
First round matchup. Yeah.
Who's so we have? Let me pull it up really quick.
You got the Raptors. You got the Nets in the back half. You got the Cleveland Cavaliers. Maybe the Hornets in there, right?
So here you go. I got it right here. So you got Heat number 1, Bucks, then we're number 3. Celtics, Bulls, Raptors, Cavs, Nets. I guess Hornets are in there, and the Hawks. We do not want the Hawks the first round.
Don't want the Hawks.
We don't want to be number one. Okay, so I would say that right now. That would be just like
It's so strange to say that. Like, we don't want number one.
I know.
I would.
Because the Nets are hanging out there too. I would say if we were the 4 would play what, the 7?
No, 2 would play 7.
Oh, the play-ins. Yeah. So 4 would play
5. Bulls.
If we're 3, then we're playing the Raptors. I'm okay with that.
I'm okay with the Raptors.
And then the Bulls, I'm okay with too.
Ideally, Nets get 8. I think the Nets will get 7. But Nets get 8. We got 2, and we play the Cavs. That would be ideal.
Yeah, I think if we get Cavs, I think we're fine. Cavs, Raptors, or Bulls.
Yeah, I think so too. We
think
need one of those 3 teams.
You don't want the number 1 seed, I guess. We're number 2. All right, we're number 3. It's a good spot.
Yeah, I like it.
You figure that Nets bounce one of those top teams off, then you still retain home court.
Yep,
because you're seated higher than them. All right, I like that.
Yeah.
I like that. Okay. All right, let's stop it.